Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, and sponsored by Revival Gold, in which we take a closer look at some of the most interesting news items in the mining space. Joining me today is Neil Adshead, consultant analyst at the Commodities Discovery Fund. Neil, welcome back to Kitco.
Thanks, Paul. Good to be here again.
We have a lot to talk about today, Neil, but before we start, please note that Kitco Metals and Kitco Media provide news services only and do not offer tax, legal, or investment advice. The opinions expressed are those of the contributors and do not necessarily reflect the views of Kitco Metals. For complete terms and conditions, visit kitco.com. And of course, if you like what you see, don't forget to hit that subscribe button. Neil, let's start with gold. The third quarter closes next week, and with the gold price at record levels, investors are expecting to see some bumper profits. Neil, what are your expectations of the third quarter results?
Well, we must have seen the highest gold price, average gold price for a quarter ever. So obviously the revenues are going to be very, very strong. But what's also interesting right now is, we've had a bout of quite strong inflation for a couple of years or so, and we're seeing signs of that abating. So, there should be quite significant margin expansion. So I'm hoping, and it'll be great to see two or three gold mining companies maybe over, the expectations far exceed what the sell side analysts are projecting. I mean, there'll be some bumper profits, and that will definitely draw some investors into the sector for sure.
I think it would be fair to say that any gold producer worth the name should be generating an all-in sustaining cost margin of at least 50%. Would you agree with that, or is that perhaps a little harsh?
I think 50% would be a record, I believe. Normally, I think during the sort of happy days, the maximum margins you're seeing like that are sort of in the 40% range. So if we start to see a few of the higher grade producers, for example, generating plus 50% margins, that would be spectacular for sure.
And do you think that will be the trigger for investors to really open their eyes and start to notice the sector again? Investors have been noticing the sector. I did look at the GDXJ year to date. It is up 35%. That is pretty significant. But we're not. I think we're still seeing most gold mining companies trading below NAV. It's not like the happy days of when I first started as an investment analyst. Some of these, hot producers of the day were trading at 2.5 times NAV. So to sort of see those multiples would be remarkable again. So there's certainly a lot of room there to, for some of these producers to trade at even multiples that are, plus 1 times NAV would be very, very rewarding for any shareholders today. Will certainly be a step in the right direction. Now, with a lot of the producers expecting to add significantly to their cash balances, in terms of capital allocation, what do you think companies should be doing with their bumper profits?
In any sort of cycle, especially when the cycle starts to get warm, investors will flip. When the cycle's sort of quiet, investors often want, returns to shareholders. They want to see greater dividends, share buybacks, things like that. When we start to see higher gold prices, a lot of investors will flip and want to see growth. So for sure. So ideally those cash, I'd prefer to see that cash pumped into improving margins on mines, mine expansions, and obviously building new mines and or acquiring new projects to build. So it should stimulate investment in existing mines and also investment in new mines, and hopefully, and that's what every junior mining investor wants to see, is some acquisitions of the small guys for big fat premiums.
Well, money seems to starting to flow again with some big raises announced or completed this week. Asante Gold announced $100 million raised with an unnamed strategic. Vizsla Silver, 65 million Canadian, a bought deal with 10 million over allotment as well. Arizona and Sonoran Copper upsized a 30 million Canadian bought deal, and Greenheart Gold announced a 25 million Canadian bought deal. Neil, is this indicative of the financing window opening as the metals prices surge?
I think some of those financings came on the back of the 2 mining investment conferences that just closed in Colorado. I think there was a lot of bankers there, met a lot of companies, which also met a lot of investors. And so some of those deals were spawned due to that conference. I think we're actually in a pretty good market for financing right now. It's not like every junior can raise whatever dollars they want, but I quite like that. for me, a bull market, sort of peak bull market, is when you also get peak capital misallocation. Quite a lot of companies get money that actually shouldn't be getting money in the first place, or some companies take far too much money than what they really need and end up wasting that money. So for me, we're in a kind of a normal market here, whereby good quality companies can raise whatever they want. Companies maybe that really either shouldn't exist or shouldn't really be capitalized adequately are not raising the money, and I'm okay with that. I think we're in quite a healthy market at the moment.
I think that your comments there, Neil, are borne out by my experience at the Precious Metals Summit in Beaver Creek a couple of weeks ago. During that week, gold hit $2,600 per ounce for the first time, but there were very few happy faces there. So it does seem that the financing window is not yet fully open for juniors or all juniors.
Yeah, I would say it's not open for all juniors. Yeah, which is, again, I'm okay with that. If you're a good team and you got a good project in a good location, you can nearly always find money. And now we're seeing some big checks being written, tens of millions of dollars. There's an Australian company that's buying an asset off Newmont at the moment, essentially just raised close to $500 million. So there are big checks being written out there. The capital is, people often say it's a bit capital starved, but there is good capital coming into the sector right now. It's just not flooding into the sector and going maybe to places where it shouldn't go.
Okay, well, let's talk more about Greenheart, which they're raising 25 million Canadian. Greenheart was created as a spin-off from the combination of G Mining Ventures and Reunion Gold early this year. The company is led by the former executive team of Reunion, and it aims to acquire a pipeline of 5 to 6 early-stage exploration projects across the Guyana Shield in Guyana and Suriname. Neil, is the Guyana Shield the hottest exploration address in the world right now? And if so, why is that?
I'd say it is for gold. Yeah, in terms of region and prospectivity, West Africa has been very, kind of a successful region with big discoveries by various companies over the last 10 to 15 years or so. And if you put the Atlantic Ocean back together, the geology in kind of northern Brazil, Guyana, French Guyana, and Suriname is basically, obviously, it's the same geology. It's just significantly underexplored in northern South America compared to the comparable terrains in West Africa. And from a political risk point of view, there's obviously been various coups and other bad headlines, negative headlines out of a lot of West African countries, whereas you're not really hearing the same issues in those countries in northern South America. So to answer your question in a very roundabout way, I would say yes. The Guyana Shield is back, so to speak. It was a hot area in the 1990s, and the new wave of juniors are finding good oxide, soft, plus 1 gram gold deposits in open pits, basically sticking out the ground.
There's been quite a bit of M&A activity there this year. We mentioned G Mining Ventures and Reunion Gold, but there's also Mako and Gold Source Mines. One of the big questions at the gold conferences in Colorado earlier this month was when or if G Mining Ventures will buy its next door neighbor G2 Goldfields to unite their Oko properties. When do you think that will happen, or will a bigger company step in and take them both out, Neil? What are your thoughts there?
I haven't got a crystal ball, so I'm not really sure what's going to happen there. Anglo Gold came in a big way to invest in G2 Goldfields. They essentially do own gold deposits on the same crack, just in different host rocks, so they present differently. But before a big processing plant is built in that area, it would make sense to put the two companies together. How and when that happens and at what price, I would just be guessing. But it would obviously make a lot of sense. Put those two together, and you're probably going to get a 300 to 400,000 ounce a year gold production facility that's going to appeal to any of the major mining companies. So Anglo in a way is already there. I think it's potentially just a matter of time, but yeah, who knows when.
And just over the border in Suriname, you've got Newmont present, you've got Zijin Mining present, and there's been other big companies active there in the past, recent past, such as IAMGOLD. So a lot to watch for there. Now, let's talk about shorts. No, not what we're wearing off camera, waist down, but the chatter in the space about a short report issued last week by Iceberg on Newfound Gold and its Queensway project in Newfoundland. Hopefully we can discuss this now without getting a lawsuit. What were some of the key points? Iceberg pointed out that Newfoundland has drilled 2,349 holes for over 560,000 meters, and yet there is still no resource estimate. Iceberg believes this is because the continuity of the mineralization is problematic. Neil, what is continuity in the context of a deposit or ore body, and why could it be problematic in an orogenic gold system like Queensway?
Well, very simplistically, you drill holes to see what's in the ground, but then before you can design a mine or develop a mine on a design, you have to basically determine how those drill intervals join up. You basically have to create the rocks have to be in some sort of three-dimensional solid, and then you determine a grade for that solid, and then you determine whether you can mine that solid at a profit. So the continuity, which is basically how the mineralization joins up between the drill holes, is a obviously crucial and fundamental part of any, let's call it, mine design. So if you struggle to join the dots, you have too much uncertainty when it comes to designing a mine and how you're actually going to extract that ore at a profit. So continuity is crucial, and really that's that's really one of the fundamental roles as a geologist. It's all well and good drilling the holes, but then you've got to basically join the dots between the holes, and that's where the geologist earns their keep.
Now, could there be other reasons why Newfound Gold hasn't yet put out a resource estimate? I recall, for example, that Great Bear Resources didn't put out a resource on its on its Dixie project in Ontario, and yet it was bought out by a bigger company. Are there other reasons why a company may not wish to put out a resource estimate?
Well, yeah, there are. I suppose you could argue they've probably done with 500 plus 500,000 meters, they've probably done a resource estimate themselves, even if it's just on, to use the geology slang, even if they just did it on the back of an envelope. For whatever reason, you would really have to ask the company why they've not put a resource estimate out. Some people could say they've not done it because it's probably not very good. Other people could say they've not done it because of look what happened to Great Bear. Keep the mystery there as to how big it is, rather than actually sticking a pin in it and potentially disappointing investors who might think it's 10 million ounces, but really it's only 5 million ounces. So I would say if you really want to know, I would talk to the company and get them to explain why they've not yet put a resource estimate out, which admittedly after 500,000 meters of drilling is quite unusual.
Okay, I have asked them and they have yet to respond. Let's watch that space. Iceberg also referred to grade smearing and says the company has been pulled up in the past by regulatory authorities about this. Neil, what is grade smearing and how can it distort perceptions about a deposit?
Grade smearing is really just a mathematical thing, I suppose. Depending on how a company chooses to report a drill interval. So, say they've drilled 10 meters at 2 grams. You look at that and you think, okay, there's 2 grams over that 10 meters, but you might find it's actually really, 20 centimeters at 100 grams. And how you report that is very different. And how you would mine those 2 different intervals, the way they've been reported, is potentially very, very different. So you really want to see what the real grade is, down a drill hole, for example. So often if I see an interval like that, I ask the company, can you show me the individual assays over that interval? And I can then determine the degree of mathematical grade smearing they've done. So, the word smearing, people, it's kind of got negative connotations and people think that the junior is doing some sort of crooked reporting, but it's not crooked reporting. It's just basically how they choose to report that mathematically. The gold is there. It's just really a way. It's really like a marketing tool, I suppose. You always try and make it look more continuous than what maybe it is. And as grade goes up, generally continuity goes down. So you'll often juniors may try to smear high grades to make it look more continuous.
So that, you could argue that is deceiving because there's a big difference between having continuous mineralization over 10 meters rather than a 20 centimeter skinny vein that has all the juice. Okay.
No, it's true.
Yeah, shares in Newfound Gold are down 21% year to date. We have a lot more to come, but first we're going to take a brief break and a word about our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF, on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Welcome back for part 2. We really appreciate our sponsor for supporting the channel and helping to bring you a deeper dive on mining news. Now let's switch to copper. NGEX Minerals announced the exploration plan for its largest ever drill program at its Lunahuasi copper gold silver discovery in San Juan, Argentina. Lunahuasi is 6 kilometers from Filo del Sol and 8 kilometers from Jose Maria, the deposits that BHP and Lundin Mining are forming a 50-50 joint venture to develop. The Lunahuasi program includes step-out drilling to grow the deposit and closer spaced holes to generate some data which could lead to an eventual resource estimate. Lunahuasi currently measures 400 meters by 900 meters by 960 meters and has returned intercepts such as 60 meters grading 7.52% copper equivalent. Neil, that sounds like a very, very high-grade intercept. How unique does Lunahuasi look?
Well, I mean, you can't argue against drill intervals like that. You know, most sort of copper projects I've been following their drill results over the last year or two, you know, quite often they're like 0.3, 0.4% copper, which again, if the mine was going today at plus $4 copper, probably be making money. But, you know, to build one of these big mines in a remote location, you kind of need those sorts of grades, those NGEX and Filo type grades. So yeah, so spectacular drill results. Admittedly in a remote location, but you know, the world's going to need this copper in the future, and those deposits they're finding in that Vicuña district are pretty unique at the moment and very special.
Now, going back to our conversation earlier about financing, the Lundin Group, NGEX, the majority shareholder there is the Lundin Group or the Lundin family, I think about 30-35%. They have shown their ability to raise money. They raised a lot of money for Jose Maria in the day, Filo more recently. So one can expect that NGEX is going to be well resourced to continue aggressively drilling Lunahuasi.
Correct. Yeah. No, I don't think there's any problem with the Lundin family raising money. And, you know, they've got a great track record of success. They've been in the Andes for probably over 30 years now, including, you know, obviously Lucas was there as a younger man, and the family's had great success in the very prospective part of the world.
Now, although it's a very high-grade and exciting copper discovery, the challenges to developing that district include a lack of infrastructure, 4,000 meters of elevation, possibly water access issues, and possibly binational aspects given the proximity of the deposits, the Chile-Argentina frontier, and of course, CapEx. Neil, this looks like whilst it's exciting, it looks like it's going to be something that's way in the future before we see any copper out of it.
Yeah, 100%. Yeah. You know, it's a very complicated part of the world to build a mine for multiple reasons, which you outlined. But, you know, $5 copper, assuming it goes there and stays there, and I think it's $2,700 gold today, it'll get built eventually. You know, some of the projects that are being built today, they were uneconomic 20, 30, 50 years ago when they were discovered. It's just a matter of time, especially something of that quality. Even if maybe the existing owner tries to build it, fails for whatever reason, and then someone else builds it 10 years later. You know, we've seen that multiple times. It's just that such an impressive concentration of metal will ultimately be developed.
Now, I guess that's one of the attractions of deposits that can potentially sustain multiple decades of production, because that means they can go through various price cycles and therefore get a couple of bites, 2 or 3 bites of high copper prices, which will compensate for the moments in the cycle when there's low copper prices.
Oh yeah, 100%. Yeah, I remember a story Don Lindsay told me many years ago. Teck built Red Dog, and I think for the first 10 years the mine didn't really make any money. But then they had 2 years of very high zinc prices, and it's something like it paid off the capital 4 or 5 times in 2 years. So it just shows
these mines that can, survive the downturns can then make crazy profits in the uptime. It's just, mines don't generally return sort of 10% a year. It can be 0, 0, 0, and then you can have a 200% year. And, over the life of the mine, it's a very attractive business.
I suppose that comes back to the saying, you can't win if you don't play. You've got to be in the game to get the rewards as and when they're available. Okay, let's turn our attention to Mexico. Next week, the country will swear in a new president, Claudia Sheinbaum. A key topic of conversation at the Colorado conferences earlier this month was the yes, no, maybe about whether or not there will be an open pit mining ban. Neil, will Mexico be better for exploration and mining under Claudia than current president Andres Lopez Obrador, or AMLO as he's known?
I think same with any jurisdiction, really. I think nobody really likes uncertainty. Mexico hasn't been great under AMLO for mining investment. You kind of hope Claudia, she's going to come in, hopefully just provide a little bit more certainty, even if the certainty is that the jurisdiction is not great. I think as long as there's some degree of certainty and what the goalposts are, then mining companies can generally work with that and invest accordingly. And if the uncertainty continues or the mining policies become worse, then we'll see a continued outflow of mining investment in Mexico.
Well, AMLO has certainly left his Morena party successor a nice going away present by putting a nature reserve over the Yucatan operations of US aggregate company Vulcan Minerals this week. Claudia takes office with a ding to US-Mexico relations and a $1.5 billion ICSID investment arbitration case. Neil, I guess it's a case of careful who your friends are there.
Indeed, yeah.
Okay, let's switch to uranium. Uranium Energy acquired Rio Tinto's Wyoming assets, including the Sweetwater plant, for $175 million. It sees meaningful development synergies with its other assets in Wyoming that it acquired in 2021. UEC aims to build its third hub-and-spoke production platform. The Sweetwater plant has a licensed capacity of 4.1 million pounds a year. Now, the uranium price has pulled back a bit recently, so it would seem to be a good time to pick up uranium assets.
Yeah, sure. Yeah, uranium assets. Or if you're a uranium mining company, or uranium equities, if you're interested in the uranium companies. It's uranium's always very, very cyclical. It seems to have quite wild sentiment swings too, which is quite interesting. But I think long term, the world really needs nuclear power. I think the world's a little bit split though on nuclear power from my perspective, in that in the West, where we're maybe relying on private utilities to build new nuclear power plants, I think they're very difficult to finance these days because the capex is so big. But in Eastern countries, let's say, or Asian, India, China, the Middle East, where there's the government, is a little bit more authoritarian, let's say, and they're kind of in nation building mode. That's where we are going to see the big growth in future of nuclear power, not necessarily in the West.
Now, Neil, a lot of people have an opinion on the uranium market, whether it's going into surplus, whether it's going into scarcity, whether the price is going to go up to $100 or more per pound again, or whether it's going to continue to slide. What's your opinion on uranium?
You can't really run a nuclear reactor without any uranium. And the uranium market's been in deficit for probably as long as I've been an analyst, which is roughly 20 years. I did a big study on uranium in, I think it was 2005. And then went long big time during that period in the boom. The price to me has to go higher. The cost of uranium in nuclear fuel and the cost of that to a nuclear reactor is very, very small. So it doesn't really matter whether uranium goes to $200 a pound. The reactors will be buying it, and they have to buy it. There isn't really a substitute for it. So yeah, I'm a long-term uranium bull. We're not really building any big new uranium mines in the world. And, the uranium that used to come out of Russia, that's no longer there. A lot of the producers in Africa, the big countries, the sort of Namibia, Niger, countries like that seems to be in decline. So, yeah, I'm pretty bullish on uranium.
Okay, Neil, finally, a number of companies have economic studies, resource updates, or other announcements coming in the coming weeks, including Silver Tiger, Rio 2, Faraday Copper, and Discovery Silver, just to name a few. Neil, which companies are you looking forward to reporting something new, and why?
I've been looking at some of the better gold discoveries, let's say. I'm always kind of interested to see how their economics stack up. It was good to see Kinross put a PEA out on Great Bear recently. So, major mining companies. So you have to think there was not a lot of fluff in the capex estimate and things like that. So it's kind of interesting to see. And on that front, I'm kind of intrigued to see I think it's Oko West, now owned by G Mining. I think they're putting out is it feasibility study or pre-feasibility study next year? And same with Rupert Resources and their Ikari gold projects in Finland. Both multi-million ounce, both big open pits. It's going to be quite fascinating to see how the capex and opex forecasts there come out.
Well, a lot of good things to look forward to. That's it for this week. Neil Adshead, thank you very much for joining me.
Thanks, Paul. Always a pleasure.
Thank you. And if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.